Welcome back. Just a couple minutes away from Fed Chair Powell's press conference to explain what turns out to be kind of a hawkish statement top of the hour. They didn't cut rates, but let's talk to Claudia Sahm about what they did do. She's new Century Advisors chief economist, creator of the Sahm Rule, a member of our mock Fed panel. Hope you're feeling well, Claudia. It's great to have you here today, especially. Are people reading too much into the statement, do you think?
Yeah, we got to be real careful today not to make news out of what is not news. Right? Like coming into this, we knew what's left, inflation. Like that's what's left. That we got good news on the labor market, things have gotten better, and all the Fed is doing is telling us that's where we're headed. So I don't think there's the statement, the very small changes made to the statement should come as a surprise or tell us something we didn't already know. Like inflation is still somewhat elevated.
So, you're talking to a trading desk right now, and it's like we're pounding stocks lower, we're sending rates higher. This is going to craft the narrative for the next 6 weeks. What do you want them to be thinking about?
Again, I think it's important in the press conference to take a deep breath. Right. The Fed, the actions of the Fed, and this has been true for some time, and it will absolutely be true for this year. It is driven by the data. We do not have the data that will decide when the next Fed cut is. We just don't. And Powell doesn't have it, and he's not going to give it. So trying to infer that from what he says is just noise. So we just really need to be careful about, we want to hear that information, but that just is not known yet. So be careful.
Yeah, Claudia, it's Brian Sullivan. Here's the problem I think the Federal Reserve has, as somebody who has gone across this great land talking to people. The Fed has no control over a lot of the inflation that we actually feel. I mean, they can't do anything about automobile insurance rates. They can't do anything about home insurance rates. I doubt they can do anything about health insurance or health care costs, right? We know that eggs are soaring because of avian flu. You get my point, is that we could have inflation data that comes in red hot, and what the heck is the Fed going to do about anything that I just referenced?
Well, they do have levers to pull on demand. I mean, that's how interest rates work, keeping them high. So they can look at the sum total of inflation. But you're absolutely right. We've had some very specific kinds of cost push inflation. So eggs are a great example of this, where the Fed does not have the precision to go at the root cause of that. And yet they can look at overall, like, is demand outpacing supply, and are we overheating? And I mean, we don't see that, right? Like the last mile of inflation does not look like that. But they don't have the magic wand, but they do have the mandate, and they have to keep, whether or not it's the kind of inflation that they can fight really well, they have to keep at it until inflation comes down. So that means interest rates stay elevated.
Do you think the risk this year, Claudia, is more to the inflationary side or the contractionary side? Granted, maybe it can be both.
I think there's so much policy uncertainty within the fiscal and the trade policy space. And honestly, you could see it go in a lot of different directions with growth effects or with inflationary effects. I think inflation, if you're really interested in like, what's the path of interest rates, what's the Fed going to do, they're going to be just intensely focused on what happens with inflation. So those are risks that, like, in a Fed space, but more broadly in the economy, I think we just have a lot of unknowns in terms of what the economic policy outside of the Fed is going to look like this year. And while it won't necessarily be the bottom falls out, it's so dramatic, it can still be disruptive. And we're tired. We've had a long disruptive period. So to have more of that facing us is just, it's kind of a dispiriting way to start the year.
Yeah. Well, if the chair feels the way you feel, we'd expect him to kind of push against this and to use the market language, almost be dovish. But he tends to kind of reinforce the statement message, Claudia. And sometimes I think he likes to upset markets, frankly, sometimes.
I don't think he comes out to make big reactions. And frankly, today, like, trying to keep things as calm as possible and stay away from some fairly politically charged topics, which I'm sure he'll be getting about Trump administration policy and Fed independence. So, I mean, I think today will be, try and play it cool. But he does need to. The Fed, when Powell speaks, he speaks for the Federal Open Market Committee. So, he needs to convey the concerns that come from the committee. And, again, at this point, with where the data is, where the economy is, being concerned about inflation first and foremost, like that, I mean, that's inappropriate. And that's what I imagine we'll hear from him.